Students, in the first session we have a study about the introduction to partnership final account. We have seen the introduction of partnership, meaning, definition of partnership, partnership deed, partnership contract and provisions of partnership, and we have also studied the methods of account used in the partnership form. So let us recapitulate once again what we learned in the first session. As we know that the partnership is nothing but it's a mutual concern of two or more persons. They joined together this business to carry on a lawful business and to share profit and losses of the business as per the Act 1932. We also know that there are some methods. So we have seen there are two methods of maintaining accounts in the partnership firm. First method we have seen fixed capital method. In that we have to open two different accounts, partner capital account and partner's current account, and we know what we are recording in first account and second account. In first account we are recording whole capital contributed by each partner in partner capital account. Here their capital is constant. There will not be change during the financial year or during the life period of partnership. It will remain constant. If the partner again contribute additional capital, that will be also recorded in the partner's capital account. Partner may contribute capital in form of cash or in form of asset. So it will be credited to partner's capital account, and all entry related with the partners like partner's salary, partner commission, partner interest or partner's benefit or partner something is taking out will be recorded in the second account, which is called partner's current account. Here the balances fluctuate. If he is taking something, will be recorded on the debit side of partner current account. If the account is getting the benefit, it will be recorded on the credit side of partner's capital account. And hereafter we have to transfer these balances to balance sheet. Liability side, it is a credit balance. If it is a debit balance, we have to record it on the balance sheet asset side. And if the method is second one, that is fluctuating method, in that case all entry related to partners will be recorded in only one account, and name of that account will be partner's capital account. This we have understood very well. Students, in partnership final account, actually this is the first chapter. We have to cover almost 10 chapters in this bookkeeping accountancy. First chapter is partnership final account. It is having very high weightage. As far as the last year concerned, board asked problem based question on this is for 15 marks and 2 marks will be asked in the objectives. So it is having very good weightage. The student who study this first chapter can get easily passing mark in the examination. So overall weightage so far was 17 marks. 15 marks on problem and 2 marks will be asked for the objectives. In objectives, what we have to remember, you must know the meaning of the partnership, you must know the definition of the partnership, how many partners can start the business, what are the procedure, all that may be asked for the 2 marks. But the main focus will be on the 15 marks which will be asked in the problem. So that time we require this methods of account. So hope you may have studied that methods of account. Now we have to understood thoroughly, because this is a problem based question. So we must understand what is trial balance, because your question will be in the examination will be trial balance. You will be given a trial balance with 5 or 6 simple adjustment or whatever the adjustment. So your question is trial balance and with 5 or 6 adjustment. As we know, the trial balance we have studied, it's a closing balances of ledger account. Trial balance is what? It is a closing balances of ledger account. So we have a trial balance, all the ledger we have closed. If we revise the accounting cycle, we know the transaction that we have to record, that we have to transfer, then close those ledgers account and prepare a trial balance. So that trial balance will be here your question with 5 or 6 maybe the adjustment asked in the examination. So we know the trial balance debit side will be transferred on the profit and loss account debit side, or trading account debit side, or balance sheet asset side, except, remember, except return or drawing. Return will be deducted from the opposite side, and all debit side of trial balance item will be transferred to the trading account debit side, or profit and loss account debit side, or balance sheet asset side. Similarly, the credit side of the trial balance may be transferred and will be transferred on the credit side of trading account, credit side of profit and loss account, or balance sheet liability side. So likewise, we have to simply understood what is trial balance and what items will be appear in the trial balance that we have to transfer to these accounts. I'm just briefly explaining you some of the important items which will appear on the trading account debit side. The very first item of the trading account is opening stock. Some of you know about what is the opening stock. Opening stock is last year closing stock has become this current year opening stock. So very first item generally which appear on the trading account debit side is opening stock. If during the year we have purchased something, so that will be added into the opening stock. The format is given with you in the book, just go through it. So we have to opening stock, then add some purchases. If there may be some return in the current year, that we have to subtract or deduct from the stock, and we have to show on the outer column. What is carriage? We know that we purchase some raw material and that we have to carry to our godown where we do some manufacturing work. So generally when we carry that from buyer place to our godown, whatever will charges, that charges is called carriage inward. We purchasing raw material and taking that to our godown or the workplace where we convert it into the finished goods. Likewise, there is one word in there, duck charges, D-O-C-K, duck charges. Sometime it may happen that we bought the goods by ship and we have to pay some charges. Those charges is called duck charges. Unloading that at the port by way of sea, we bought some goods and we are unloading there, that charges will be called the duck charges. Likewise, there may be some import duty or custom duty. So when we bought the goods from the out of country, that time we have to pay custom charges or import charges. Student, there is one word in the trial balance debit side, that is the productive wages. So let me clear you what is the productive wages and unproductive wages. Productive wages which are related with the production. So it will be appear on the trading account debit side. Remember, productive charges or productive wages will be recorded on the debit side of trading account. Unproductive wages will be recorded on the debit side of profit and loss account. So we are talking about the trading account. So productive wages will be recorded on the trading account. Likewise, there may be a wages and salary. When the word first appear wages and salary, so it will be recorded on the trading account. Otherwise, it will be recorded on the profit and loss account if it is appear in the trial balance like salaries and wages. Salaries and wages will be recorded in P&L account. When it is said the wages and salary, so that we have to record on the debit side of trading account. Thereafter, we may have a word like a royalty on production or royalties on purchases. It will be also appear on the debit side of trading account. What is the royalty? As an example, I'm a writer. I'm writing one book on bookkeeping and accountancy. I have studied 2-3 books, and thereafter I have written my own book. In that case, when I'm publishing that book, I'm giving my rights of to that publisher. That time that publisher will pay me some amount. That amount will be called a royalty. So royalty, if it is related with the production or purchase, will be appear on the trading account debit side, and all the items which is related or the expenditure which are related with the production will appear on the trading account. So these are the some of the important items that will be appear on the trading account. Similarly, we have a credit side of the trial balance. As I told you that trial balance credit side may appear on the credit side of trading account or profit and loss account or balance sheet liability side. So there are some two items generally that appear on the credit side of trading account. Very first item which appear on the credit side is sales. It's a direct income. As I told you that there may be a direct income or direct expenditure will be recorded in trading account. Expenses will be recorded in the debit side and the income will be recorded on the credit side. The very first item which appear in the trading account credit side is sales, by sales account. If there are some return, so that we have to deduct. Thereafter, there may be a goods lost by fire, goods lost by theft, goods withdrawn by the proprietor or closing stock. These are the items which may appear on the credit side of trading account. And hereafter, these are some of the important items which I try to explain you. And hereafter, simply we have to close the trading account. When we close our trading account, if the debit side is more, we arrive at a gross loss. If the credit side total is higher than the debit side total, we arrive at a gross profit. The balance will be appear on the opposite side. As an example, the credit side total is higher. As an example, the credit side total is 2 lakh rupees and the debit side expenditure total is rupees 1,50,000. In that case, the 50,000 will appear on the debit side, which is a nothing but the gross profit of the business. And this gross profit will be written as by gross profit carried down. And hereafter, this gross profit we have to transfer to P&L and account. Now coming on the profit and loss account, some of the important items. Students, when we talk about the profit and loss account, as we know that trading account and profit and loss account are nominal accounts. Debit side will be recorded indirect expenditure and credit side will be recorded indirect income. Direct income we have recorded on the debit side of trading account. Now we are talking about the profit and loss account. So very first item which generally appear either a gross profit brought down or gross loss brought down. If it is a profit, the credit balance will be transferred on the credit side of profit and loss account. Now hereafter we have to record some nominal expenditure, indirect expenditure on the debit side. I will take here the few example. As an example, salaries and wages, rent, insurance, lighting, printing and stationery expenditure, calculation of amount of depreciation on fixed asset, repair and maintenance, interest on loan, conveyance allowance, goods distributed as free sample, bad debts, loss on sale of fixed asset, legal charges, professional charges. So likewise, whatever expenditure which is in indirect nature will be recorded or appear on the debit side of profit and loss account. Examples: salaries, rent, insurance, wages will appear on the debit side of trading account. Discount allowed, depreciation amount, general expenses, miscellaneous expenses, all will be appear on the debit side of profit and loss account. Now coming on the credit side of P&L account. On the credit side, we have to record only 5 items. First item, rent received. Second, commission received. Third, dividend received. Fourth, miscellaneous received or any other received. Whatever we are receiving, that will be recorded as indirect income and will appear on the credit side of profit and loss account. Students, if there is some profit in the business and that arrive in the profit and loss account, that we have to transfer in the partners capital account, and thereafter we must know the method of account, and according to the method of account we have to transfer the profit to the partner's capital account or current account as per the method, and close down the partner's capital account or current account and transfer their balances to the balance sheet debit side, asset side or liability side. Generally the profit will appear or capital will appear on the balance sheet liability side. So have a look the balance sheet. The balance sheet is a statement which shows the financial position on a particular date. Generally left hand side is the liability side, and items which appear on the liability side, the partner's capital account ABC, three partners capital will be transferred. Thereafter there may be a credit balance of the partner's current account, it will be appear. Then generally the credit balances like general reserve, bank loan, bank overdraft, sundry creditors, bills payable, outstanding expenditure, all this will be appear on the balance sheet liability side. Let me explain what is the outstanding expenditure. Outstanding expenditure, that expenditure that we did not pay during the current year, so it becomes the liability. Why it is appearing in the balance sheet? Because there is an expenditure and the amount of that the business did not pay, so it becomes the liability of the business, so it will be appear on the liability side and it will be shown on the liability side of balance sheet. Likewise, if some income received in advance will also be appear on the liability side, because that income is not for the current year, so it becomes the liability, it is for the coming years, so that's why it is shown on the liability side. Now coming on the balance sheet asset side, generally we have all the fixed assets. Fixed asset, we know that land and building, plant and machinery, motor cars, whatever fixed asset business own, that will be appear on the balance sheet asset side after deducting appropriate depreciation and the amount of depreciation which we have already recorded on the profit and loss account debit side. Like some items are investment, prepaid expenditure, outstanding income, debtors, closing stock, insurance claim receivable, cash in hand, cash in bank, or partner's current account debit balance. So these are some of the items which appear on the balance sheet. So students, we understood the theoretical part of the partnership. Now student, we understood what is the partnership. Now we have to solve the partnership final account. As I told you that the question will be asked with trial balance and few adjustments. And your question is what? Trial balance with few adjustment. So we have a very short master key. If you will keep in mind, you will be able to easily solve partnership final account, and you will get 100% marks out of marks in this problem. Simple steps. Very first step is what? Read trial balance. Second step, read all adjustments. Whatever adjustments that we have to mark, third, that we have to mark in the trial balance. Thereafter transfer all the trial balance items into respective accounts, either trading account, profit and loss account, or balance sheet debit credit side, or balance sheet asset liability side. After transferring, take very first adjustment, tick mark that, ensure that you have transferred all the items to respective accounts or balance sheet. Thereafter, simple step is what? Take very first adjustment and give its two effect. Generally, each adjustment is having two effects. There is only one adjustment of insurance goods, uninsured goods, insured goods, which is having the three effect that we will talk when it will come while we are solving the problem. So we have to transfer and thereafter give two effect of the adjustment. Fourth step is what? Give the two effect of adjustment. One effect will be appear generally on the trading and profit and loss account, and second effect will be appear generally in the balance sheet. So one effect will be appear on the debit side and second effect will be appear on the credit side. Likewise, give the effects of all adjustment. Thereafter, very first thing which we have to do is what? Close very first account, which is trading account. When you will close the trading account, you will arrive at a gross profit or gross loss. When we arrive at a gross profit, transfer this gross profit on the profit loss account. Then try to close profit and loss account. You may arrive at a net profit or net loss. If net profit is there, transfer this net profit to partners capital or current account, the credit side. If it is loss, will be appear on the debit side of partners capital or current account. Close the partners capital account. Transfer this balances to balance sheet liability side. Generally, there may be a credit balance, so it will be appear on the balance sheet liability, and thereafter try to tally it. Okay, these are the simple steps or funda which may help you to solve your partnership final account very easily. And one more master key is there. All items which appear on the debit side of trial balance will be recorded trading account debit side, profit and loss account debit side, or balance sheet asset side, except return or drawing. All items which appear in the trial balance will be recorded on the credit side of trading account, or it may be recorded in the profit and loss account credit side, or it may appear on the balance sheet liability side, except return and drawing. Return will be deducted from the return inward. Inward means returning something. We have sold out and it is coming back, so it will be deducted from the sales. Return outward, we have purchased something and we are returning that. That is purchase return. So it will be appear on the opposite side. I mean, it will be subtracted from the purchase or sales. So it's a very simple steps. Now what we have to do, we have come on the practical based problem hereafter. So simply we will take some example of the capital methods. One or two example we will consider. We will see how to maintain that methods, fixed method by using the fixed method and fluctuating method, and thereafter we will start the solving problem on practice base. Let me explain you adjustment and their two effects. So generally there are five or six adjustment that commonly asked in all the examination. Very first adjustment is related with the closing stock, the stock at the end of year. So when it is asked in the examination, it is giving the two prices, market price and cost price. Whichever is lowest, remember student, whichever price is cost is lowest, that we have to record in final account. Example, market price is 30,000 and the cost price is 25,000. So we have to record 25 without any consideration. Whichever lowest, we have to record that. And two effects, the closing stock will appear at trading account credit side, and second, it will be appear in the balance sheet asset side. Very first adjustment is closing stock. Second adjustment, there may be a outstanding expenses. The expenses which did not pay the business during the current year and become outstanding. It means we have taken the benefit of the services of that particular thing, but we did not make a payment to that. So it become outstanding. So outstanding will be added to respective concern. For example, outstanding wages. So it will be appear on the debit side of trading account, and we have to add that in the wages. Outstanding salary. So it's a, we have to add it in the salary P&L account debit side. So it's a outstanding. Second effect will be recorded on balance sheet liability side, because we did not make the payment of these expenses. So we have to show as a shown as a liability on the balance sheet liability side. Third adjustment may be asked on the prepaid expenses. As an example, rent is prepaid, insurance generally it is given, always it is given the prepaid insurance 500. When it is prepaid means we have paid in advance, it's not a current year expenditure. In that case, what we have to do, we have to subtract. Remember sign, subtract, minus sign. So deduct it from the concerned head of expenditure which is appear on the trading account or profit and loss account. If it is an insurance, so it will be appear on the P&L account debit side. Subtract that 500 from the insurance and we have to show it on the balance sheet asset side. One effect will be deduct from concern, and second we have to show on the balance sheet asset side. Fourth, generally adjustment which is asked in the examination is bad debts. Bad debts, 5% bad debts on Sunday data. As an example, we have given a Sunday data 1 lakh and 5% bad debts. So 5% when we calculate it, it comes to rupees 5,000. So 5,000 is a loss of the business. As a loss, it will be appear on the profit and loss account debit side, and from the balance sheet, we have to deduct this 5,000 from Sunday data and we have to show 95,000 in an outer column. So these are the 4 commonly asked adjustment. Likewise, we have 21 adjustment when it will appear. We will see at the time of solving the problem. Thank you.